Foreclosure surge, a growing problem. Foreclosures are on the rise again. This is a bad sign. It means people are struggling to pay their mortgages. Rising interest rates are squeezing homeowners. Many are finding themselves underwater. Their homes are worth less than their loans. Atom, a real estate data provider, shows alarming data. In the first quarter of 2024, foreclosure filings were up 18% from the previous year. That's a big jump, and it's a sign of trouble ahead. More foreclosures mean more homes on the market. This can drive prices down for everyone. We've seen this before. Remember the 2008 housing crash? Millions lost their homes. The economy went into a deep recession. We need to avoid a repeat of that disaster. The domino effect, foreclosures and falling home values. Foreclosures have a ripple effect on the entire housing market. When homes are foreclosed, they are often sold at a discount. This puts downward pressure on prices for surrounding properties. This can lead to a vicious cycle. Lower prices mean more homeowners are underwater. They owe more on their mortgages than their homes are worth. This makes them more likely to default on their loans, and the cycle continues. Falling home values also hurt the economy as a whole. People feel less wealthy when their homes are worth less. They cut back on spending. This can slow economic growth and lead to job losses. This domino effect can be devastating. It can impact entire communities. It can wipe out people's savings. It can lead to financial ruin. Crashing down, the potential for a housing market collapse. Could the rise in foreclosures lead to another housing market crash? It's a real possibility. The factors that led to the 2008 crash are present today. We have high levels of household debt. We have rising interest rates. We have a volatile economy. A housing market crash would be catastrophic. Millions of people could lose their homes. The economy could plunge into a deep recession. The financial system could be destabilized. This is a worst-case scenario, but it's one we need to be prepared for. We need to learn from the mistakes of the past. We need to take steps to prevent another bubble from forming. We need to regulate the financial industry more effectively. We need to educate people about the risks of debt. A housing market crash is not inevitable, but it is a real threat. We need to be vigilant. We need to be proactive. We need to be prepared. Steering clear of disaster, economic and policy solutions. What can be done to prevent a housing market crash? There are a number of economic and policy solutions that could help. These include lowering interest rates. This would make it easier for people to afford their mortgages. It would also reduce the incentive to default on loans, providing mortgage relief. The government could offer assistance to homeowners who are struggling to make their payments. This could take the form of loan modifications or refinancing options, increasing regulation of the financial industry. We need stricter rules to prevent predatory lending practices. We need to ensure that lenders are not making loans that people cannot afford, promoting financial literacy. We need to educate people about the importance of responsible borrowing. We need to teach them how to manage their finances effectively. These solutions will not be easy to implement. They will require political will and public support, but they are essential if we want to avoid another housing crisis. Foreclosure is not just an economic issue, it's a human tragedy. Losing your home can be devastating. It can lead to financial ruin, emotional distress, and social upheaval. Families are torn apart, communities are destabilized. The human cost of foreclosure is often overlooked. We focus on the economic impact, but we forget about the real people who are affected. We need to remember that behind every foreclosure statistic there is a family struggling to cope with a life-altering event. We need to do more to support families facing foreclosure. We need to provide counseling services, job training, and housing assistance. We need to treat people with compassion and understanding. Foreclosure is a traumatic experience. We need to do everything we can to help people through it. We need to offer support and guidance. We need to help them get back on their feet. The housing market is uncertain. Foreclosures are rising, prices are falling. What can you do to protect your investments? Diversify your portfolio. Don't put all your eggs in one basket. Invest in a variety of assets, including stocks, bonds, and real estate. Educate yourself. Learn about the risks and opportunities in the housing market. Understand the factors that can affect property values. Be cautious about debt. Don't take on more debt than you can afford. Make sure you have a comfortable cushion in case interest rates rise or your income falls. Seek professional advice. Talk to a financial advisor or real estate agent. Get expert guidance on how to navigate the current market conditions. Protecting your investments requires careful planning and informed decision-making. Don't panic, be strategic, and seek advice from trusted professionals. Section 7. Learning from the past, avoiding another housing crisis. We've been through this before. The 2008 housing crash was a painful lesson. We need to learn from our mistakes and avoid repeating them. What caused the last crash? Lax lending standards. Banks were giving out mortgages to people who couldn't afford them. This created a bubble of unsustainable debt, deregulation of the financial industry. Wall Street was allowed to engage in risky practices that destabilized the entire economy. Lack of financial literacy. Many people didn't understand the risks of borrowing money. They took on too much debt and were caught off guard when interest rates rose. We need to address these underlying problems. We need to promote responsible lending practices. We need to regulate the financial industry effectively. We need to educate people about the importance of financial literacy. By learning from the past, we can create a more stable and sustainable housing market. We can prevent another crisis and protect our economy. Section 8. The role of government and financial institutions. The government and financial institutions have a critical role to play in preventing another housing crisis. They need to work together to promote affordable housing. We need to make sure that everyone has access to safe and affordable housing options. This requires government subsidies, tax incentives, and other policies that encourage the development of affordable housing. Regulate lending practices. We need to prevent predatory lending and ensure that lenders are making responsible loans. This requires stricter regulations and oversight of the financial industry. Provide financial education. We need to educate people about the importance of responsible borrowing and financial planning. This requires public awareness campaigns, school curricula, and community outreach programs. The government and financial institutions have a shared responsibility to protect the housing market and the economy as a whole. They need to act proactively and collaboratively to prevent another crisis. Section 9. Building a more resilient housing market. How can we build a more resilient housing market, one that can withstand economic shocks and prevent widespread foreclosures? Here are some key strategies. Promote sustainable home ownership. We need to encourage people to buy homes they can afford. We need to promote responsible lending practices that ensure borrowers can manage their debt. Diversify the housing market. We need a wider range of housing options, including rentals, affordable homes, and mixed-income communities. This will create a more balanced and stable market. Invest in infrastructure. We need to invest in transportation, schools, and other infrastructure that supports strong and vibrant communities. This will make homes more desirable and support property values, foster economic opportunity. We need to create jobs and economic opportunities that allow people to thrive. This will help people afford their homes and contribute to a healthy housing market. Building a resilient housing market requires a comprehensive approach. It involves government policies, private sector investments, and individual responsibility. Section 10. Conclusion: navigating the foreclosure storm. Foreclosures are a storm cloud on the horizon. They threaten the stability of the housing market and the broader economy. We need to take this threat seriously and act proactively to mitigate the risks. We need to understand the causes of foreclosure, the potential consequences, and the solutions available. We need to learn from the mistakes of the past and build a more resilient housing market for the future. This is not just an economic issue, it's a human issue. We need to remember the families and communities that are affected by foreclosure. We need to offer support and guidance to those who are struggling. By working together, we can navigate the foreclosure storm and create a brighter future for all.